What's going on with the commercial real estate market? Is there going to be a gut of foreclosures? Is the market going to continue to decline, or are we at the market bottom? That's the topic of today's video. My name is Steve Peterson with Infinity Investments, and we're going to dial in today to what is going on. Real estate, and particularly commercial real estate, especially this year, is a very local business, because what's going on in the Bay Area here is completely different than what's going on, let's say, in Miami, which is completely different than New York and Chicago. And all these different areas have wildly vary in terms of what's going on. And the pandemic has really shifted what's happening in terms of commercial real estate, whether that's office, retail, multifamily, industrial, you name it. It is really more local than ever, right? And I can tell you, here in the Bay Area, I'm in Oakland, San Francisco, particularly the interior Bay Area, we have been in a recession from a real estate perspective, commercial real estate perspective, last, I would say 2 years. Since the summer of 2022, I've seen a major contraction in our GDP in the commercial real estate world. Can't speak about the whole economy, I'm not an economist, but I can speak on behalf of the commercial real estate industry. We have been contracted, a whole lot of contraction has been going on, all right? And a whole lot of vacancy, a whole lot of default of buildings, with office properties leading the way, right? But multifamily properties have also been affected. And we've seen a real big increase in foreclosures over the last year. We've seen a huge increase in terms of vacancies, not just in office, but also in multifamily. We've seen a huge spike in crime. We've seen a huge spike in the cost of money. We've seen a bunch of insurance companies not wanting to insure buildings in this area. We've seen lenders, particularly in Oakland, not wanting to lend in this area. You want to call it redlining, or people saying, we don't want to take losses. We've seen a bunch of companies leave this area. Meanwhile, in a place like Miami, and from friends I know and people I know in the business, if they put an office space out for lease, it's going immediately. I mean, there is very little vacancy for office, for multifamily in that market. And that probably has to do with some of the policies they have, which have brought investors and brought companies from California, from the East Coast, and from the Midwest. So what's happened in Miami, totally different than what's happened in San Francisco and Oakland and in the Bay Area. And even in the Bay Area, a place like the Silicon Valley has not seen the decline that San Francisco and Oakland has seen, because throughout this shift in the world, the economy, the AI boom has really lifted up San Jose and the Silicon Valley. Meanwhile, San Francisco has really suffered. Oakland has tremendously suffered. So where does that leave us now, entering into the fourth quarter? It's like we say in football, you got to have your foes up in the fourth quarter, because that's where we at. And this has been one of the more difficult years that I could see in my industry, in my business, in my industry, for a long time. Because not only was the interest rate spike up, but we also had, exterior events. I say exterior. I don't know what you would call the pandemic. That's like a black swan event or something like that. That's outside of the norm. Because of the policies that was here in the Bay Area, everything really got shut down, and we have not recovered from that, right? And as a result of that, also, crime went through the roof. And so, like, for instance, in Oakland and San Francisco, a lot of businesses that, when they were able to open back up, never really were able to catch, their stride. And when they were catching their stride, so many break-ins, so much violence, that, people who support those businesses had to think twice, because they didn't want to get their windows busted out. They didn't want to get robbed. So that is not typically information that's going to be on a market report, right? You're looking at the market, what's going on with vacancies, but why do we have so much vacancies? Why are there so many businesses leaving? All of those things is not going to talk about the shift in the way things are done, right? Oakland, we also have lost all our professional teams. So where are we at today? And this is a question, I'm doing this video because I'm getting this question a lot right now from a lot of different clients, right? Because for the first time probably all year, I've got a lot of people calling me, thinking about buying, thinking about selling. It's been a tough year where I've called a lot of people in my database, checking on them, and they're just like, look, we're not doing anything. I put my money in the bond fund, I put my money in the bank. I'm not thinking about real estate right now. Well, people are starting to think about real estate, especially with the change in interest rates. I had a buddy of mine call me and he said, hey man, I'm gonna be taking some money out of a bond fund. I'm looking for a building. I was like, yes, thank you. All right. But why is that happening? Because the bond market, and I'm not an expert on the bond market, but I can tell you as the rates go down, his yields are, he's looking at, hey, I'm gonna make less money in this fund. And now I see an opportunity to take this money and put it into the real estate market, commercial real estate, investment real estate market, where I can make a little bit more income than I'm gonna make in this bond fund. And I have the chance for appreciation and growth that he wasn't gonna have in that bond fund. He's also gonna have a chance for things like depreciation from a tax standpoint. So you get some ancillary tax benefits with investing in real estate. So now it makes sense for him to invest. Now the interest rates have come down. The Feds, dropped the rate 0.5%. I didn't see that coming. I thought it was gonna be 0.25%. Most of us didn't see that coming. We were being real kind of pessimistic because we thought rates were gonna drop in the second quarter. It never happened. Third quarter, it never happened. And so we just like, it's not gonna be that much. But it was actually a nice 50, it was a nice 0.5% rate cut. And mortgage markets have responded. So now the cost of mortgages are down pretty significantly, especially for multifamily, even for office and retail, depending on your credit profile, depending on the property, all those things. So where are we at today? Right now, here's the one thing: foreclosures, and this is the number we track in my office, really, on a weekly basis, and probably like a daily basis, because we're prospecting for properties like this because we're trying to solve problems. There's a lot of distressed properties in Oakland and San Francisco in the Bay Area. I don't know too much about other markets, but I can just say in my market, what is a lot? So right now, this morning, there was 238 in Oakland. I think there was 216 in San Francisco. I could be off in San Francisco by a couple of days. I checked on Friday, but that's a lot. But it's actually nothing when you compare the numbers 2008, 2009, because that was a whole different anomaly. However, what I see is about anywhere from 10 to 15 new foreclosures hitting the foreclosure, I won't say market, but hitting default, official default every week, right? This number does not, however, include CMBS defaults, which properties on CMBS, they have to publicly report. They may be in default of a loan covenant, but not an actual notice of default phase where the lender is trying to take the property back, right? So while there's a good amount of default, there's not an abundance of default, and properties that are maybe in trouble are not necessarily in notice of default stage in foreclosure. So what's going to happen? A lot of these properties have loans that are due, meaning that they're mature. The loan has to be paid off in full. Even if the monthly payments are coming in, when the loan matures, the loan needs to be paid off in full. That's been a major concern this year. What lenders have been doing is extend and pretend, meaning they'll extend the loan out, hoping that, conditions improve and the borrower can get financing and take them out. Well, lenders who've done that may, depending on the property, have put themselves in a better position because financial markets have improved. And now I can tell, this is not a market report, but I can tell from my inbox and my email, my inbox on social media, phone calls I'm getting from different lenders, people I know in the industry, asking me if I got loan situations I'm working on, telling me, hey, I got this loan. I got one lender just sent a term sheet on one of the properties I have. They just sent it to us. And that wasn't happening early in the first and second quarter this year. It wasn't happening at all, in fact, I could, for sure. So there's been an uptick in lending activity. Mortgage rates are lower, right? Defaults are consistent. For me, guy who is working the business, feet to the street, and also I'm not a big institutional player. I'm a small business, work with a lot of mom and pop investors. I work with a lot of mid-sized investors, I would say. So I'm seeing things really from the street level. I believe that we are seeing a bottoming, certainly of the multifamily market, certainly of the retail market, and also I believe that we're going to be seeing bottoming out of the office market in the Bay Area. It may take a little bit longer than multifamily and retail, but I think those markets that have been hit hard are really going to start seeing a bottoming out. And we have been down. I've seen apartment building prices down as much as 30% in my market. Office buildings, in San Francisco have traded, 60, 70% of what they previously were worth, right? Vacancies through the roof. But we're seeing an increase in activity and volume. And all we need as a marketplace is transactions to happen, and that will create a bottom. And I say that based on what I lived through and all of us lived through in '08 and '09, is it would look like an abyss for a long time. But once we start seeing deals happen, then we kind of can see, hey, there's a floor here. But here's the thing though. Here's the thing. Most of the investors who really made money came in during the abyss when there wasn't the floor, right? They kind of set the floor, and in doing so, they made a ton of money. Then once the floor was set, as things started to improve, then slowly but surely the marketplace started coming on, and then we start rolling up again. You know what I mean? That was a different time. This is a different time. I think there's some similarities. I think there's some differences. But I think, at least in the multifamily market, which I can speak, as an expert on here in the Bay Area, I believe we are bottoming out, especially in Oakland and San Francisco. I see the transactions, an uptick in transactions. I think that, retail and office may take a little bit more time, but I think we are getting investor confidence, we are getting capital in the market, and we're getting deal flow. And those three things are a great indicator to where the real estate market is. I don't got a crystal ball. Neither does nobody else. All we can do is look around us and see what's going on and try to make some informed decisions about what we're going to do next, right? I also think that, I think contrarian investing when everybody else is scared to invest, I think that's one of the best ways to make money. And I think that if you want to get in on this market before Alibaba and the 40 Thieves rush back in it, I think now is a great time to do so and take advantage of what's in front of you and go make some money. But let me know what you think. I'm just throwing some thoughts out there. I'm getting a lot of calls right now. I'm trying to, get in front of this. I'm trying, I'm biased because I love commercial real estate. I love the business. I love multifamily. I want this to roll right, but I'm also practical, and I'm also want to make good decisions for myself, my clients, my investors, and I hope you do the same. Hope this video was helpful. If it is, like, subscribe, share, and let's into the next video. Deuces.